Welcome to ING's Think Aloud, where we try to make sense of the world in the most unbanky way we can. In today's episode,
together we can and will rebuild our economy. And when we do, we'll not only build back, we'll build back better.
Our numbers are looking so good, and frankly, I used to say a V, and people would say, well, maybe not, I don't think so. Some would say, no way. We have a super V, you're right. It's now looking like it's a super V.
At their party conventions, President Donald Trump and rival Joe Biden promised a brighter economic future under their leadership, with Trump highlighting recent job gains and record highs in the stock market, and Biden vowing to invest in infrastructure with new jobs and higher wages. With less than 10 weeks to go until the presidential election on November 3rd, opinion polls still show that Biden is ahead by a significant margin. But the race is far from over. I'm Rebecca Byrne, and today I'm joined by James Knightley, ING's Chief International Economist in New York, to discuss the state of the US economy, how it could influence the election results, and what the outcome of the election could mean for policy and for the markets. James, at the beginning there we heard Trump talking about a V-shaped recovery. The Nasdaq's making new all-time highs, we've had 3 months of job growth, and the housing market seems to be recovering. But the polls aren't really reflecting any of this. As we approach the election, do you think that could change?
Yeah, I think certainly the points you just raised are all strong arguments and arguments Donald Trump uses as to why he should be re-elected. But of course, we've got to remember there's lots of downsides to this economy too. It's a real tale of two stories, to be honest. On the negative side, that is really supporting the polling for Joe Biden is the fact that COVID-19 is not beaten. We're still seeing very, very high infection rates, and that is acting as constraints. People are anxious, and that leads to worries. So not only is there the health concern, there's also economic concerns about this, because a number of states that had reopened have reversed course, and that meant that businesses that had reopened their doors and rehired workers have had to reverse that too. So that's led to both health worries and economic worries that it's hurting sentiment. And then secondly, we've got to remember that there's still 30 million Americans or so that are claiming unemployment benefits. And that is a big worry for those people. And then on top of that, you've got other issues such as the Black Lives Matter movement. The polling suggests that there is certain uneasiness as to about how Donald Trump has handled the situation. So yep, Donald Trump can point to a number of positives, but there's also a lot of negatives for his campaign that are supporting the Democrats' story right now.
Mm-hmm. And on top of that, Republicans and Democrats in Congress failed to reach a deal on another rescue package this month and have now gone on recess until Labor Day on September the 7th. But are we likely to see more stimulus in the next 10 weeks? And what could that mean for the outcome of the election?
Yeah, I mean, it looks as though it's going to be very, very difficult to get an all-encompassing package. I mean, what we had over the recent weeks was the Democrats proposing this $3.5 trillion package, the Republicans proposing something closer to $1 trillion. Now, how do you reconcile those two massive numbers? You just can't. And as we know, the talks have broken up. Now, there are ways of doing this piecemeal. Donald Trump, for example, has used executive authority or executive orders to get some support into the economy. But I think it's going to be unlikely that we're going to get anything more broad than that. The Republicans are saying, well, we should agree on what we can agree on. The Democrats are being a little bit more reluctant to go down that path and saying, well, no, we need a full all-encompassing aspect. So the fact that they're so far apart on so many issues suggests that I think we're probably not going to get any major additional support. And at the moment, the evidence is that the economy is perhaps losing a little bit of momentum. After we've had the first phase of the recovery, the reopening, people have re-engaged with the economy, and activity has, to be honest, bounced a lot more strongly than most analysts would have thought it would have done. I think the second phase, which is driven by economic fundamentals, is going to be more challenging because there is evidence already that the jobs growth has slowed. The income story is not looking quite so strong. And as I said, confidence is also weakening as well because of health concerns and the worry about jobs. So that sort of that nexus coming together, it's still going to create a difficulty for the Trump narrative in terms of the reopening and the recovery story.
But James, as always, this election is going to come down to the swing states, isn't it? We know New York and California will always be Democrat. Alabama's always Republican. But what are the key battleground states in play this time, and how are they holding up economically?
Yeah, as you say, this isn't a straight runoff vote. It's not the number of votes that Trump gets versus the number of votes that Biden gets. I mean, if you look at opinion polls, Joe Biden's currently ahead by about 7 or 8 percentage points, which would create a margin of victory of about 9 million votes. But it's not like that. It's the Electoral College. It's a state-by-state battle. And as you say, many states are clearly going to be voting Democrats. Many states are going to be clearly voting Republicans. So it's those in-between states. And there's 5 of them that we're focusing on: Pennsylvania, Wisconsin, Arizona, Florida, and Michigan. And in those states, Joe Biden is ahead in all of them, apart from Arizona, where it's neck and neck. And this is because, in Florida, there's generally an older population that are anxious about the COVID response. And then you've got the likes of Michigan and Wisconsin, which have been impacted very, very hard by job losses as well. So that whole narrative of the health crisis and the jobs story as well, I think that is really driving this issue. And at the moment, if you believe the opinion polls, it looks as though it's going to be a pretty significant victory for Joe Biden.
Okay, but you think there are 3 possible scenarios for how things will play out. So let's talk about these. The first is that Trump wins a second term, but it's a narrow victory. Congress is split, Democrats retain the House. What would this mean for policy and for markets?
Yeah, so Donald Trump is campaigning very much on a similar grounds to what he campaigned on in 2016. So he wants lower taxes, lower regulation, a bit of infrastructure spending. But as you say, the polling suggests even if he does surprise and win the presidency, he's unlikely to win control of Congress. But the House is going to remain Democrat-led. And they're going to really restrict his ability to get legislation through on tax cuts and reduced regulation. There may be some possibility about a bit more infrastructure spending as well. So I suspect what's going to happen is what we've seen pretty much over the last 2 years, if this is the scenario that actually unfolds. And that is basically Trump is constrained on the domestic agenda, and he is forced much more to go on the external agenda. And this is where you see the rhetoric against China and Europe being ramped up. Those trade conflicts really start to ramp up as he really pushes the narrative on making America great again and bringing jobs back to America. So those international tensions, the worries about trade are going to be in play. And of course, the narrative during that period was also that is bad news for the US dollar. It's not particularly good news for equities as well in this uncertain, somewhat unpredictable environment of international relations. So that is something to bear in mind. Ordinarily, you think low tax, low regulation should be good news for equities. But if you can't get that agenda through, and it's much more about protectionism, that could actually be detrimental for the dollar and also for equities as well.
Right. You've also mentioned the possibility that under this scenario, Fed Chair Jay Powell could be replaced. Would that have any impact on Fed policy?
Yes, we've heard a lot of criticism of the Federal Reserve from Donald Trump over the last year or so. He was unhappy that the Fed didn't cut rates as quickly as he thought they should have done. He wants to be, driving policy much more in terms of getting a Fed that is willing to back his agenda. And so therefore, you've got to imagine that there is a very strong chance that Jerome Powell is replaced as Fed chair. He's not afraid to do that. We saw, seen that in the past. And I think, getting someone in there that could be more responsive to his demands, would lead to a situation where you've got lower for longer interest rates, more quantitative easing as well coming through. So a very, very stimulative monetary policy background. And that in itself could also be detrimental to the US dollar as well. So these sorts of things could well play out and are worth watching.
Now, the second scenario is Biden wins, but again, Congress is split and the Senate is held by Republicans. Ordinarily, some of Biden's policies would be unpopular on Wall Street, like corporate taxes going up, the 2017 cuts being reversed. But on the other hand, maybe we have better trade relations. So is this sort of a neutral outcome for the markets?
Yeah, I think Joe Biden is clearly looking for a situation where we are going to be seeing more investments, particularly in green energy and particularly in infrastructure. But at the same time, that's being balanced out by higher taxes, as you say, rising corporation taxes, personal income taxes as well, capital gains taxes. So that in itself wouldn't be particularly supportive for equities, you would imagine. But yes, if you've got more normalized relationships with Europe, that is going to be helpful for global growth, global trade flows. In terms of China, it's going to be interesting because being tough on China is a very popular message or a popular theme in the US. So I don't think we're going to be seeing, US or US-China relations, what we might say, normalizing or returning to what they were. I think we're going to still see tensions, but perhaps Joe Biden might do it slightly differently. Less trade tariffs, because, of course, we've got to remember those tariffs are not paid by China. They're paid by American consumers and American businesses. I think that what we would likely see is tough rhetoric on China, but perhaps financial incentives for corporates themselves from the American government to bring jobs back. So subsidies, tax breaks, etc., to try and incentivize that. So I think that in itself would help to ease concerns about trade and the impact on growth. But also, if Joe Biden hasn't got a clean sweep, and if the Republicans do have control of Congress, then that's going to mitigate some of the more aggressive policies. So you're probably not going to see as much spending as Joe Biden is proposing, and you're probably not going to be seeing as much tax rises as Joe Biden is currently promising as well, because Congress will sort of nullify them to a certain extent. So that may be actually quite a positive scenario for both markets and in terms of economic activity.
But the third scenario is that Biden wins in a landslide, and with Democrats controlling both the House and the Senate. And there's an old axiom that Wall Street likes gridlock. So how would this outcome be greeted by the markets?
Yeah, I think this would be more of an anxious story for markets because, as you say, that constraints that having a Republican-controlled Senate would perhaps limit the scope for big spending increases and limit the scope for big tax increases. Well, they're gone. If you've got a clean sweep, Joe Biden can get pretty much whatever he wants through. And that would see potentially some significant increases in the deficit in the near term. You could see the dollar coming under pressure as well. But you've got to remember that actually, if we see these reforms work and the higher taxes do actually yield more revenues, then that could actually lead to a similar story to what we saw with Bill Clinton. And that could actually be quite a positive backdrop because under Bill Clinton's term, we saw the deficits become a surplus and we saw the dollar perform pretty well as well. So, it's very difficult from the position we currently stand to really call it. But, there is perhaps scope for a reasonably encouraging macro backdrop and also a market backdrop from all of this. But as I say, it's really dependent on how COVID-19 goes. We've still got a lot of uncertainty on that. And that is going to be the most important driver, much more important, I would argue, than the actual election itself.
Okay, James Knightley, Chief International Economist in New York. Thanks very much.
Thank you.
This podcast has been prepared by ING solely for information purposes, irrespective of a particular user's means, financial situation, or investment objective. The information does not constitute investment recommendation, and nor is it investment, legal, or tax advice, or an offer or solicitation to purchase or sell any financial instrument. Read more at think.ing.com/content-disclaimer.